Welcome everyone. Welcome to today's lesson. This is the best lesson that I'll ever have. This is the best lesson that you ever learn, and this is the best lesson that I'll ever teach. Welcome. So I go by the name Konam, as you can see by the corner, by the head and the footer of the screen. So right now I'm opening the one of the defeat the market maker PDFs that I compiled myself, Konam. So, as I said, today this is the best lesson that you ever have, and this is the best lesson that I'll ever teach. So, to do yourself a favor, to in order for you to do yourself a favor, kindly press this subscribe button if you're watching this on YouTube. Share, press the like button, and click on the notification button to get informed the next time I do another great lesson. So, moving on without wasting time, time is precious. Today's topic, as you can see by the screen, is the 50 EMA bounce trades, also known as intraday 50. Oh, ID 50, that's the nickname. That's what my students and I refer it to, the ID 50. So let's move on. So, what is an ID 50? You might be asking me right now. So, in ID 50, this is a trend continuation setup above all, an ID 50 is a trend continuation setup, meaning that once you see an ID 50, when you know about it, by the end of this video, you'll be able to trade continuation setups. You'll be able to know and tell when the trend is continuing and not reversing, and how you can profit with it. Let's get into it. I'm so excited because this is the best lesson that I'll ever teach. So, as I said, this is a trend continuation setup. I hope you have your notebook or somewhere where you're writing or taking screenshots or something, because this is the best lesson that you ever learned. so, so it is the first pullback after an anchor formation. It is, get it as it is written right now. I wrote this myself, I typed it myself. This pullback occurs in all time frame, so it has different names according to the time frame that you'll be noticing it from. The first one is the ID 50, and that happens on the 15-minute time frame. That's the intraday trade. The second one is the H1 50-50 bounce. That happens on the H1, the 1 hour chart. The third one is the H4 50-50 bounce on the 4 hour chart. That happens on the 4 hour chart, literally. So, what are the rules to the ID 50? We're getting into it, guys. It's a bit simple, but it's not simple. It's a bit simple to understand and very profitable. That's why I'm happy about it, because it's one of the secrets on making money. That's how myself I'm making money, and others know about these things for making money. So let's get into it. Rules to the ID 50. Firstly, let me okay. Firstly, firstly, for the ID 50 to happen, this should be you should these are there should be boxes that you should check. You should be checking when you are trading on tomorrow when the market's open. Right now it's Sunday, the 17th of January 2021. So on the 18th of January 2021, when you'll be trading when the market's open, the first boxes that you should be checking are that for you to have identified an ID 50 is that there must be an anchor present to the left. That means on price that has already formed. The second one, there must be a 13 and a 50 EMA cross. This is a very crucial and important crossover in the strategy. The third one, the first pullback, as we said earlier, to the 50 EMA must be 25 to 50 pips. It must be between that range. Like to see a quick, you'd like to see a quick move back up to the 50, and that move should be within the range of 25 to 50 pips. That should be taken note of. Please, I'm begging you. The fourth rule to check for one to say, I finally identified an anti-ID 50. You should wait for price to bounce or trap off the 50. You understand that when we'll be getting into the charts. The 50 now, that's the entry trigger. What trigger you to press an entry, whether it's an entry buy or it's a sell entry. These are the candlestick patterns, the crucial candlestick patterns. I talked about it in the entry videos, and I'll still talk about it now, and I'll talk about it later in another final entry video that I'll do. I will tag it as, you should see it right now, it should be popping right now. So this entry trigger, for the entry trigger, the type of candlestick pattern that you should be looking forward to see that. The first one is the railroad candlestick pattern. The second one are the stars, the morning star, the evening star. The third one is the cord of wood, and the fourth one should be the shift candle. And the shift candle, as you all know, it should be a candle within 7 to 10 pips or above. It should be of a body of reasonable size and short wicks and shift candle, and all of these candlestick patterns should close above or below the 13 EMA, and they should, for confirmation of your entry, the last confirmation of your entry, that's the TDI confirmation. You should see an RSI crossing over the signal line and the market baseline. That's the TDI confirmation that we'll be looking forward to. That's the final confirmation. Then we enter a trade. Simple as that. Then we make money. We get out of the trade with profit. As simple as that. I've done it. It has worked for me. My other students have done it, and it has worked for them. The student that I've once had, I've done it, and it has worked for them. They made money, and right now I'm teaching you so that you also make money. And my students are going to be doing it, and they're going to make money. And you are going to join the team and become my student and also make money. So let's get it. These are some of the chart examples that I managed to put through for you. So according to the rules that I just explained to you, so what do we have? The first rule, we need to find an anchor. As you can see, let me annotate. Okay, the first rule right now, the anchor right here, as you can see with this big M area, this big multi-session M, because this must be this right here, this area right here must be the New York from the previous day, if not up to this area here. And that's the first leg. The first leg was in the New York of the previous day, and the second leg was in the Asian. So this was a big multi-session M, big multi-session M. So that's the anchor that we're looking for. What confirms the anchor? This right here, the 13 and the 50 EMA, and that also being our second confirmation. Lovely, isn't it? The third one now, as we said, price gets out of here, gives us this formation, then bounces off the 200. Then what we're looking for is this move here, this move here, this move, this pullback here, the first pullback to the 50 EMA after the 13 and the 50 cross, and after the anchor has been formed. That's what we're looking for here, right here. Maybe someone else seeing it. Let me show it to you. Okay, this thing right here, this move right here. I hope you're now seeing it clear, loud and clear. This move right here. This is the golden move. This is the money making move. This is what we are looking for. This is what we are looking for. This is what we are looking for. Right there. Right there. This is what we're looking for. This is what we are looking for. I think I've highlighted it enough. So this pullback must be within 25 pips to 50 pips. So after rejection, usually it's done by 1 pip, but on this particular trade, the first pullback gave us 2 pins off the 50. And so after that happens, what are we now looking for? We're now looking for our confirmations. And what are those confirmations? And that is our candlestick patterns. As you can see, this formed some sort of like star here with this inverted hammer here and this spinning top here and this big bullish candle here, giving us some sort of like hammer can some sort of like star. I mean, sorry about that. Some sort of like star there. Then after you notice that candlestick patterns, okay, then what are we now waiting for? A cross below the 13 MA, and after the cross below the 13 MA, what do we now look for? The TDI confirmation. And what on the TDI that we're looking for? And that is the signal, that is the RSI signal line crossover. That's what we're looking for. Then immediately as that happens, we enter our trade. Around this area. We just need to monitor to see if price doesn't bounce, but it doesn't. And with the guidance of our 13 MA here, we are sure that we are safe, and our take profit is going to be hit in the break of the low here. The break of this low here also gives us confidence that our trade is still going down. Breaks here, then retests here, then it continues to the downside, giving us 50 pips for those who would have held it up to this part here, giving us 50 pips. And for those who would be using, for those of us who will be using the 13 MA is our out, is our exit. Our exit right there, right here. That's where our exit to be, right here. We would have gotten out of this trade with our pips, our 30 pips. Really beautiful, really beautiful. It would have been a beautiful trade here. And most trades are like this. Most trades are like this. I repeat, most trades are like this. Most trades are like this. The patterns are just the same. Moving on to the next one now. This one is a bullish one. There's a buy. So let me zoom it. This one now includes another confirmation that we had not talked about. But just a confirmation that just boosts our confidence in the trade, and extra confirmation and makes our trades even stronger. That's why I indicated there. Makes that indication makes the trade stronger, and the indication is the 50 and the 200 cross. That makes the confirmation stronger. So back to the basics, back to what we've talked. There's a big old multi-session W here, as you can see, huh? And within that W, that multi-session W here, let me indicate it again. Within this multi-session W, we got this little W here, forming a 1-2 trade. A 1-2 trade. We'll talk about that when we'll be talking about peaks for my students. That's stuff for my student now. Big O W. So within the noticing W there is a W, and that's the anchor. All of this is the anchor. So our anchor on the left is we have it. That's the first one. The second one, the 13 and the 50 cross, we have it. The third one, pullback. The first pullback, we closed. So this pullback, as you can see, it was a pullback at the same time. It was a trap for the sellers. You see, sellers were trapped here, were trapped, and they were not expecting this to happen. But for us, we will never be trapped, and we would have not been trapped. We would have actually been waiting to profit from the trap. So wait for the pullback. After the pullback, we're now looking wait for the close. As you can see, we have a star here. There's a star. There's a spinning top here. You can see with this small body. Then we have a shifting candle that closes above the 50, above the 30, and that should be our entry. So our entry will be right there, indicated by the line. Or you wait for price to clear the 200 since it's really close here. You wait, so your entry will be right here. If you're not confident enough of the first pullback, but because we now know that we have we have two confirmations already, the peak, the anchor, and the 13 yen. So we are now just waiting. We'll be confident that too confident that our entry will be just even before the 200, because we know that it's going to be broken, and our first and our take profit will be all the way up here at the 35 pip mark. Because for us, we'll go in for 30 pips. Our entry, our exit may be somewhere here at the 200, the 800. I mean, that's our exit will be. For those who decide to hold it a bit much longer, they'll exit here with 55 pips. This whole move was a 55 pip move, and it would have been made stronger at this point by this cross. So if you notice it, and what this simply means that once you're doing the trade, then you notice this 15-200 crossover. I don't mean like with experience you a trade, but with no experience, when this happens, you just know that you're in the right way. And if your TP was a bit further from where you will be at that moment, so you just be confident that your TP will be hit for sure, for sure, for sure. For real, for real. So as always, the TDI confirmation needs to be used as well. As you can see, the RSI crosses the market baseline and the signal line at the same time. We take the entry, so we're in the right direction. So guys, that's just it. It's as simple as it is. So sometimes the anchor might be very ugly, meaning that it might not be understandable. Price is ugly sometimes. It is not as beautiful as the textbook or it is not as beautiful as the textbook might look. But with experience is the best teacher. I am a teacher. I am a good teacher. I am actually the best teacher. But experience is, I do accept defeat to experience. Experience is the best teacher above me, above myself. Pardon me, I'm joking. Okay, but I'm actually a good teacher though. Okay, let's get on with it. You can confirm, you guys can confirm if you've been following this channel, or if you've been watching this video for the first time, this is your first time hearing from me. Before you comment in the comment section, press the subscribe button, press the like button, then comment in the comment section. Am I a good teacher? I would like to hear your feedback from you guys. Am I a good teacher? That's the question for you to answer in the comment section. So let's continue. The first thing, so we're looking for the same things. The anchor, got a W anchor. This time it's a bit ugly, not as beautiful as the textbooks might tell us. Yeah. But you know, guys, W is a W, an anchor is an anchor. So that's what we're looking for. We get it. The second one, the 13 and the 50 cross, we get it. What else? The pullback now. Guys, these things repeat themselves. History repeats itself. This thing happens each and every time. You just need to know how to identify these things. So come learn with me. Come get mentorship so that you're able to identify such beautiful patterns. And even more, I have a lot more of these patterns. So it's profit after profit. Join the community for evidence of what I'm saying here. I post the evidence of what I'm saying right now in the community. So before you think that I'm gassing or whatever, join the community. The results are there. Get in touch with me. My Telegram is in the description box. I have an Instagram. Check out the Instagram. Defeat the market maker. Go in the Instagram. Check it for evidence. So let's get in. Uh, First pullback. That's the third one. So guys, these things, just as I was saying about it, you get up, ping, break. This was a trap to the sellers. Sellers would be loading sells here like mad selling. They will be mad selling here, mad selling positions here all the way here, all the way, all the way. People will be putting their TPs here around this area, yeah. And what happens? Price just and their stop losses will be here. So where they get stopped out, that's where we enter. Imagine that. How beautiful is that? Where they get stopped at, that's where we enter. So immediately after this shifting candle to hit their stops, our entry will be here. Gets confirmed here. And we just hop on the right, baby. 40 pips for those who will be taking the 45. For those who will be having their take profits here at the blue tracer, my take profit was actually here at the 800. I think that's the area around the 30 pips area. And for those who will be holding it for much longer to hit the AEDR for the day, 6-5 pips profit. My students will be within this area of take profits. Yeah. So to be one of my students, you know what to do. You know what to do. You know where to find me. I'm right there in the description box. I'm just a click away from you. Uh, so what then happens? Our take profit will be out by this time. So these baddest moves here will be happening without us, with us enjoying our profits. Some drawing, some doing whatever they want, doing some charity work, whatever. People do whatever they want with their money. Let's move on. Let me clear my chance here. I really do enjoy doing this, guys. I really do enjoy showing, giving my experience to you guys for free here on YouTube. For the few, for the fortunate few who are going to get in touch with me, join the team, join the mentorship, or just join the community, they're going to benefit tremendously. Trust me. So, rules are rules. The first ones anchor, third one pull back to the 50, fourth one rejection of the 50. And what are we looking for now? Entry way right below the 13 clause. Here, right here, the 13 clause. Our stop loss will be 7 pips here. It's about to rain right now where I'm here. Apologies for that. I'm too excited to be giving out this knowledge for free. Yeah. So by it's not free. Yeah, it is free, but it's very profitable. You never get it anywhere on YouTube. From anyone here on YouTube. I'm the first one to give it all out and to give everyone out here. And my students as well. My students are actually going to get more because there is more of these trades and setups from where this come from, where this came from. So you know what to do. Join the team. Simple. So our entry will be there. my exit over here for 30 pips. I get 30 pips all the time, all the time, all the time. Stop loss over there, 10 7 pips, stop loss. So 1:3 is risk reward ratio. Imagine that. Imagine that right there. If one decides to hold it a bit longer, they'll profit with 50 pips. Beautiful. So on the H1, so as I had said earlier, the ID 50, it occurs on three different time frames: the H1, the M15, the H1, and the H4. So on the H1 time frame, it's now called the H1 50 pounds. Same rules apply as the ID 50. Let's get more into the examples. Let's get it. Let's get it. Let's get it. This is UJL. H150, same things. W, get a bigger ugly anchor. Why is it ugly? Because so amazing. Gives this W here. It like it's going, came back once more. Give this something like this. It's an anchor, guys. Then we shift off. So clear. So our anchor, first thing, yeah. Our anchor, second thing, 1350 cross, single, the third one, pullback. Guys, these things are you. The entry right here. Stop loss will be right here. This is a swing trade. Take profit 170 pips. Imagine that. What could you do with 170 pips? 170 pips on a standard account. That's how much? That's about 1,000.7 on a 10 standard. That's about $17,000. Imagine that, guys. You need to start backtesting this, practicing this, then applying this. The confirmation, the TDI, same things, same things. I'm tired of talking about it now. You must have the idea now. You must know how to do it now. You should start using it from tomorrow. Market opening, you start profiting. I want feedback. It's fine if you cannot join the mentorship. It's fine if you cannot afford the mentorship or the signals. It's fine. I don't mind that. But don't disappoint me. Once you're getting this for free, learn it, understand it, and profit from it. I want feedback. I want to get your feedback in my Telegram. Hit me up. My Telegram is just there. Just set the contact for the time when you profit from these setups. Then hit me up and just tell me that you profited. That will give me the energy to keep on giving and making these videos out there for free for you guys. First things, anchor, we have a beautiful one this time on NZUSD. Second, 1350. Third one, first pullback, entry, TDI confirmation. You get it. Oh, profit after profit, 6585. Profit after profit, guys. Profit after profit. Profit after profit, guys. Apparently. So, I'm all gassing and all that. But as you know, the markets are the markets. The markets belong to the market makers, and the market makers belong to God. So about the markets now, the market makers do what they want, as God can do what they want, what He wants to them to. So, so what we need to do now is we need to always, guys. I repeat, you need to always act according to the market makers. What the market makers are saying, what the market makers are doing, what the market makers are presenting in the form of price. How do market makers communicate or speak to us? They do so in form of price action with what price is doing. That's how the market makers communicate. That's how we hear them. We understand their language because we use this market. Defeat the market makers. That's the language that we understand to defeat them. So how do we defeat them? So as it is said, to defeat, if you cannot, no, to defeat one, you need to, you know what? Come on, guys, come on. Let's just type it. Let's get on into trading. Let's get on. I'm bad with English anyway. I'm good with trading. defeat the market makers. Our whole part is our whole job is to defeat the market makers. And how do you do that? We imitate them. We know, we practice all their moves. We know how, we see how they move. We know the best way that we defeat the market makers is that we know what their next moves after they give us a signal. Just the same way, if they give us an anchor, we know how to treat them, we know how to deal with them. That's how we defeat them. We know how they move, and we know what they mean by their certain moves. That's how we defeat them. So sometimes we might not get setups, and it's fine. It's the markets. But what I can tell you that that's not it's not always. We win more than we lose, but we do have sometimes where we lose. So it wouldn't be fair if I just show you the winning ones. I need to show you also the losing ones. And though they are few, but you just need to know that it happens. So what do we have? Let me annotate there. Pushes to the low, second one to third one, stop onto the low, gives us a this the anchor, gives us an anchor there, came here and give us this whole part is an anchor, closed ended, as you can see here, give us this beautiful W off of the 200 after it had anchored here. So that's the whole, that's why I say this whole area is an anchor. It's the anchor. So that's the first one, anchor, 1350 cross, the pullback now. Our entry will be right here after this bullish candle. Oh no, will be right here. That's where the entry will be. So we have failed to break this high here since it closed below it. So price, we'll be expecting our check profits of maybe around this area, and then price just bounced off this high there, then came back down. But for those who would have been waiting for this high to be broken, they would have been safe from their stop loss being hit. Let me show you one way if you trade this strategy for your stop losses not to be hit. Your exit will be here. Why? Because 13 EMA would have been invalidated. Get that? Invalidated. The 13 EMA would have been invalidated. So your stop loss would have not been hit because your stop loss would be around this area. So after this invalidation and this rejection of this high, you just exit here with not even half a pip loss that you would have got there. So just be still safe. With this strategy, you're safe in many ways. When you're right, you are always safe. When even you're wrong, you're always safe. So just money after money, guys. Money after money. For this one, we have a beautiful, let me annotate again. We have a beautiful peak here. Beautiful, beautiful, beautiful. Giving us a triple top, something like that. Something like this. So what happens is anchor here. Anchor there. We get that anchor there. Get the 13 and the 50 cross during the Asian. We don't trade that because we don't trade during the Asian. After that, price get off to the downside, then pull back to the 50, then it closed above the 50. So for this trade, we'll be safe during this time because we don't trade the Asian. But if we did, our entry would be right here. Let me indicate here. It'll be right here. For by now, you should know why. will be right there, and our stop loss will be right here. So the stop loss will be it, but that's if we went against our rules of not trading the Asian, but then we don't go against that rule because we don't just trade the Asian. So because we don't trade the Asian, we'll be safe. So what will we be waiting for? We'll be waiting for another cross back to the back down below the 13 and the 2 and the 50, forming making this whole area an anchor, and this being our 13 and the 13 and the 50 EMA crossover. Then what do we now look for? Push to the downside, then pull back to the 50. And after the pullback happens, we're now waiting for the 13 EMA crossover. And that's what happens here. Yeah, then we enter here. Then price close down here. Price closed down here. Then it came back and closed above the 13. So immediately as this move happens, get out. Uh, get out. So this is almost break even. Get out. You know that things are not going well. You know that the market makers decided to make another extra move. Then price moves like this and we'll be out already. If we wouldn't have gotten out because of the 18 EMA, our stop loss would have gotten us out here, almost this area right there, 10 pips there. So those are the few trades that we could have lost money using this strategy, but as you can see on both of them, there were ways that we even able to tell that the market makers decided to go other ways and would have saved us a lot of money, and only us are safe. Other YouTube traders would have been trapped and losing money. Other people are busy losing money. Some of you guys watching this videos are busy blowing accounts and losing money. But the best way, the best solution is if you can subscribe to the mentorship, the signals chat. It's really simple. Subscribe to this YouTube channel and get this knowledge for free. So guys, thank you for watching this video. Click the subscribe button, the like, so that it may be suggested to other traders like you. Share with your neighbors who trade. Share with your friends who trade. Share uh, with your pen pals from other countries that are on lockdown now, so that they have something to learn. They have a financial financial source that they could learn and that could make them money. And this is the best strategy so far. I've been trading for 3 years now, and I've been through many strategies, purchasing courses and all that. But once I bumped into this thing, it changed my trading, it changed my life. So it did for all my students and all my subscribers to this YouTube channel. I know they're benefiting out there. They really are. Some of them tell me, some don't, but you're going to tell me. So stay tuned for more, guys. Thank you. Arigato.